Food retailer SPAR posted a 30.3% fall in its half-year earnings, led by inflationary pressures on consumers and increased operational costs arising from rolling blackouts. SPAR said it had breached debt covenants with banks, but lenders have waived this, meaning that they were not taking action. The group has high debt levels of 12.8 billion rand, mostly in Ireland, and the weakening rand makes its foreign debt far more expensive, while high interest rates make local debt pricey. The retailer has scrapped its interim dividend. For more, we are joined by Mike Bosman, who's the chairman and interim CEO at SPAR. Mike, thank you so much for your time. With this description that I've outlined for the viewers, take me through the operational performance for the SPAR Group.
Look, I think we've been very proud of the growth in the top line across all of our territories. I think you know that SPAR, we operate in 9 countries around the world, and the top line growth has come along in leaps and bounds. I think we're also proud of the fact that we've been able to manage our gross profit margins, which we would have expected to come under some pressure, but they are well maintained. The real issues that we need to focus on at the moment is a reduction of our costs as far as possible. And this is particularly in the South African environment, this is an extremely difficult thing to do, because in the first instance, I think it's probably quite well known that, like most South African business, we've been battling high costs of dealing with load shedding. But I'm very happy to tell you that 97% of our independent retailers do have generators. And so that allows some security for food supplies to the people of South Africa. Of course, these generators need to run and be able to run throughout the 24-hour cycle, because obviously if there's a load shedding event in the middle of the night, you have to be able to have the generator kick on automatically, because you need to protect your fresh, chilled and frozen products. Otherwise, you can put some food safety at risk. And I think, just to give an example, for the first 6 months of the year, we spent in our independent retailers, they've spent more than 700 million on diesel for their generators. And so one could assume that if the load shedding was to continue at the same level and the same stages for the next few months, we would expect that to be around 1.4 billion for our group, which is a very, very difficult situation that our retailers find themselves in. Of course, if the load shedding gets a lot worse, then of course that number will increase exponentially. Of course, also in the SPAR environment, all of our distribution centers do have solar. And that is very, very helpful, because, of course, most of the work in our distribution centers is done during the time that the sun is shining. So we are able to mitigate some of that. And, of course, we're thinking about what we can do to help ourselves.
Speaking of your independent retailers, what type of support has been extended to them, and what's critical for them right now?
Critical for them at the moment is to be able to be profitable. I think that's as simple as it is. And they're seeing squeezes from all sides. There are the exogenous factors that I've mentioned relating to the electricity supply and other things in South Africa. They're also faced with a situation where consumers are feeling the pinch. Food inflation is running at about 14% in South Africa, and most families are finding that they're having to cut costs all over the place just to be able to survive. So that's the first thing that's happening. From a SPAR point of view, we have so many initiatives lined up and in progress at the moment to assist the retailers on so many fronts, including from advancing loans to extending credit terms to helping them fund equipment and generators and the refurbishment of stores. So it's really an all-round collaborative effort, and I must take my hat off to the store owners of South Africa. We've got about 1,000 retailers who run our 2,550 odd stores. It's been very tough for them, and they're very resilient.
The conditions in Poland, I mean, what progress are you seeing on that front, at least over the period?
Yeah, so Poland is a very, very interesting issue that we're facing. We've commissioned a huge piece of work which the board received last week. I mean, Poland, there are about 80 to 88,000 independent retailers operating in towns and villages all over the country. So for us, this is completely aligned as an overlay to the SPAR model, which, as you know, for example, in South Africa, we operate all over the country. And so, and our retailers are basically parts of their towns and villages. So they play their part in the communities, they're involved with the schools, they're involved with the churches. And so they're able to understand what the community needs. So in Poland, you're seeing a very similar situation. So on the one hand, we are seeing quite a significant reduction in our losses there. And so we're really going to arrive at a situation now where we're going to need to make a call within the next 3 months, which is what we'll do, to either sell the stores that we have there or to expand rapidly and make it a highly profitable business. That's our strategy.
Before I let you go, when can we expect an update on the new CEO?
I would love to have said that we could have announced it already. We've had some difficulty being completely clear about what kind of individual we need, because we recognize that we are very much in the retail business, but we're also very involved in logistics and distribution, and we're also involved in different business models around the world. Having said all of that, you also need to be agile enough to deal with each of the retailers and the issues, because remember, we're also in Build It and pharmacies, and also the various formats of SPAR. But on the other side of the coin, you also need to be involved with running a listed company and all the complexities that come with it. So the short answer is we have three candidates that we are busy going through final assessments with, and if that goes according to plan, I'm really hoping that we can make an announcement in the next month or two, and that'll allow me to move from my position as executive chairman back to being the non-executive chairman of the board.
Mike, thank you so much for your time. That is Mike Bosman, who is the chairman and interim CEO at SPAR. Looking at market news now, Asian equities rose for a fourth day amid bets for supportive monetary policy from central banks in China and Japan and a pause in interest rate hikes from the Federal Reserve. Meanwhile, global internet and media company Naspers flagged a drop in its key performance metric in its next annual results because of lower profitability of its equity accounted associates such as Chinese internet giant Tencent. The total impact of these equity accounted associates amounts to 4.2 billion rand as Tencent, Naspers' largest equity accounted associate, took a knock from the impact of COVID-19 lockdowns and regulations in China. Naspers expects to release its annual results on June 27th. To talk to us a little bit more about the markets, we are joined by Han Tan, who is the Chief Market Strategist at Xfinity. Han, thank you so much for your time. So we got the CPI figures, and everyone seems to be pleased with the numbers. However, given the data that has come out through that CPI print, does it take the pressure off the Fed, at least for today?
Yeah, I think it does, and I'm glad you added that qualifier there, at least for today, right? So for this meeting in particular, and also keep in mind that the Fed at their previous meeting back in March had already suggested that a pause was on the cards for this month. So, that kind of sets things up nicely. But, of course, we note the risk that the Fed may yet shock markets with an unexpected hike later today. But that is not our base case at this point in time, especially in light of the CPI data that we got yesterday.
So we've got the Fed decision later tonight, and the thing that most people tend to pay attention to is the press conference and the responses that he does give to the journalists. What aspects of his speech, as well as that interaction, will you be paying attention to?
Yeah, so I think, to be clear, even before Powell takes to the podium, I will be looking at the dot plot in particular, as well as the economic forecasts out of the Fed, right? Whether there are some updates to where they see GDP and inflation to be in the future. But to your point about Powell's conference, so again, whether or not he's doing a good enough job in reining in the hawks, that being his colleagues on the FOMC who may still be intent on hiking further, while also managing the expectations for those who say that the Fed has done enough to at least see this deceleration in inflation that we have seen in recent data. So I think, it's understanding how good a role he is doing in balancing the differing voices on the FOMC.
Speaking of whether the Fed has been doing enough, when you look at overall central banks, are you satisfied with their, I suppose, their efforts to bring back inflation back to its target levels?
Yeah, look, I think whether or not I'm satisfied, well, I think it's really up for markets, right? And for like U.S. stocks, for example, they are willing to look past all this already. This is a narrative that stock markets have been battling since last year, right? So they're tired of it. They're looking past it. Hence are willing to push through and pursue greater heights for the S&P 500 and the Nasdaq, for example. And also keep in mind that the Fed has done a lot, right? Lest we forget those 75 basis point hikes that we saw after four separate meetings last year. So now I think it's a question of how much more will it take for the Fed to reach their 2% target, and hopefully we'll get more clues on that front in just a few hours from now.
You have China weighing a broad stimulus to boost the economy, and yet 6 months ago we were talking about a China reopening trade. We were excited that the COVID restrictions had been fully lifted. What's gone wrong here with China? Why are we still talking about stimulus 6 months later?
Yeah, and the short answer is because the recovery hasn't been as broad-based as markets like, and not been as solid as policymakers would like. Hence this chatter of the pivot. Keep in mind, even going into the pandemic, there were some structural or fundamental issues that the Chinese economy was already contending with, be it in the property sector or some of the long-term goals that policymakers had. So all that appeared to have been put on the back burner amidst the pandemic. And now that we are moving into this post-pandemic era, it's clear that the fundamentals of or the lack or the shakier fundamentals of the Chinese economy aren't on as solid a footing as they would like.
So then let's stay 6 months back, going into this year. What expectations did you have coming into the year 2023? And in what way were you either surprised to the upside or downside?
Yeah, so looking at stocks, for example, I've been surprised with the upside in the sense that I didn't think that the AI or artificial intelligence mania would have as much legs so early on and powering these US benchmark indices that much higher, right? Because, we recall coming into this year, the key word on everyone's lips was a recession. Now, granted, Europe has seen a technical recession, but in the US, it's proven pretty resilient so far, or relatively resilient, I should say, right? So I think that has been a surprise. But at the same time, I think I'm still somewhat surprised that the Fed's still apparently having to do more despite having already hiked by over 500 basis points over the past 15 months or so.
So we have the ECB also planning to meet tomorrow in terms of an interest rate decision. What are your expectations on that front, given that we've seen weak economic data as well as signs of cooling inflation?
Yeah, so despite the technical recession that I mentioned earlier, the ECB has still come out with more hawkish language. So they look primed to proceed with yet another 25 basis point hike at this meeting, and perhaps another one, perhaps as early as July. So, I think that could mark the end of their rate hike cycle that has been in tandem with the Fed and other major central banks, really, that we've seen since last year.
Han, thank you so much for your time. That is Han Tan, who's the Chief Market Analyst at Xfinity, giving us his perspective on the markets. And of course, later tonight, we do have the interest rate decision coming out of the Fed, and we'll unpack the details for you tomorrow in our market segment. But we're going to take a quick break. When we come back, we'll look at some more news.